Good morning, everybody. Good morning. Good morning. Good morning. Hope everybody's doing well. Good morning. Good morning. We'll get started in just a minute here. Good morning, Will. Yeah. Yeah. Sometimes we got to do some real work. So, yeah, hopefully be here the rest of the week. Some of us do have other jobs too. So, real world stuff, you know. All right. Good morning, buddy. We'll go ahead and get started. This is Michael coming to you from Game Edge on Wednesday, February 3rd, with our pre-market prep session. As always, we'll get back to it where we cover those three pillars: sentiment, structure, and trend. And then we'll look at our zero DT setup for today. Obviously, pre-market here, we've had a pretty significant bounce up towards 7,000. Obviously, around Livermore number, just a large sensitivity area, speculative area on the option structure that we've tested multiple times really within the past few weeks. And that's been really that hurdle to get over and hold above via the SPX. So we'll check that out. So quick market trend model here. Obviously, the bolded white line is our cumulative tick, intraday, instantaneous. If you're a zero DT trader, you want to look at that. Obviously, that's recovered from our colored ribbon. It cut into the colored ribbon, turned our mechanical portfolios off, and now our mechanical portfolios are back on. But we're still in an overall choppy area where this could absolutely fail pretty quickly and move back to the downside. So the market's not out of the woods yet. We want to see it maintained above the colored ribbon and with a positive slope to the upside, indicating there's more buying versus selling in the overall market. And a longer look back period, the red continues to expand above the cyan. So for our longer positioning in the market, we're still putting capital to work or staying long. So yeah, we'll check out GLD and SLV. So with that, I'll move on to our trading view. Obviously, a nice recovery intraday. So this is what we want to see if you want to see an overall trend change for a zero DT trader as well as a swing trader. You want to see an intraday trend change. So this was yesterday. Obviously, we opened a little bit lower, but then significant move to the upside really there in the market trend model and the tick. So this is just indicating buying straight to the upside. And then a little bit of weakness there into the afternoon. And then at the close, a little bit of weakness. But we're looking at these overall momentum moving averages, or what we call the railroad tracks. These are moving back in the proper order. So the white is moving back above the blue. And then the white and blue are moving back above the yellow. These three moving averages right here via the tick status down here. And then our ARCX is our a little bit more quality, and then starting to move back to the upside again. So you want to see the white and blue and yellow all stacked in the proper order, and then moving from lower left to upper right, indicating a significant trend change in the overall market. So we'll watch this improvement yesterday, still not out of the woods yet, but really need to see us get above 7,000 and continue with a positive slope on the market trend model, indicating more buying. So let's go ahead and jump in the SPX. Again, largest, most notional value options complex. SPXA here, February expiry turned on. We're still call dominated, so supportive on any pullback. You'll notice really down towards 69.40, 45, and even that 6,900 level where we tested down into. Any pullback should be supportive still. Really, the structure has not changed from an institutional positioning. If this was going to change and the market was going to get significantly weak, you'd start seeing overall change here in the SPXA into the February 20th expiry, and then even on out into the March expiry, but we're really not seeing that. And to the upside, you're seeing 7,100, that's PGEX, so that's a speculative level to the upside, and then 70.50, and then 7,000. So even 70.50 to the upside still has a significant amount of speculation. So we're seeing the call dominated being maintained above and below spot price. So really no change for the institutions there. And obviously we want to get above transition. We always talk about that, putting you in a more favorable environment. You'll notice significant amount of charm if we're below 7,000 on the SPXA. So that's really going to be that hurdle to get over there on the SPXA. All right, moving on the SPXP, upper quartile turned on via our web app here. Call dominated above and below spot price. You'll notice the third today is actually 25% expiry. So this is a larger expiry heading into the end of this week. And then the 6th is the next largest expiry. So we'll see how this plays out. But we're call dominated. Again, you see the speculation to the upside alive and well. You're supportive to the downside. We do have that headwind there at 7,000. Then it tapers off a little bit, but then you see it again at 70.25, which is that PGEX level. So those are areas where we'd most likely anticipate some stalling on the on what we used to call the full expiry, but now it's the upper quartile. So a headwind to the upside, which we'll look at in the charm on the net stack command, but supportive on any pullbacks, and speculation to the upside still looks good for call speculators. All right, moving on the GEX ratio. Again, this is like a put call ratio, but we add a time component, which is gamma. This is weighted for short dated call versus put gamma. And if you're a bull, you want to see this GEX ratio continue to rise. That's indicating more out of the money call speculation is coming in, overriding the put speculation. So that gives you a ratio above 1, which is an edge to the bulls and call dominated. And then if it's rising, that's indicating obviously the short dated call gamma continues to increase via out of the money call speculation. So we're seeing that. We're seeing a positive slope in the GEX ratio there to the upside after we got that large move in the SPX. So again, that is a supportive type action within the overall GEX ratio. So if we see this start to fall, one of two things will happen. SPXP will transition to sideways consolidation, and then that will fall. You'll see some out of the money, or you'll see some monetization of those calls, and then that'll start to pick back up to the upside. Or we'll see the SPX start to go to the upside, and then we'll see the GEX ratio continuing to fall. So that would not be supportive of a price move up. But above 1, call dominated, bulls are in overall control, and you're in a positive slope. So everything looks good there on the GEX ratio. The slightly cautionary that I've been looking at is on the delta balance. So this is separating the left-hand plane from the right-hand plane. So that's above spot price and below spot price within the overall options complex. So the green dotted line is your right-hand plane. That's your out of the money call speculation. Slight negative slope there, even though we are above 0. So that gives an edge to the overall bulls. The left-hand plane, again, indicating a slight slope here and above the 0 line. So that's indicating in the money calls below us are continuing to be supportive. And then the delta balance is pegged at 1. So everything is in a call dominated state, indicating that would most likely be supportive or have the opportunity to move to the upside. The only cautionary is out here towards the 6th and then on towards the 9th. This is obviously into Friday, and then into Monday, we see the delta balance drop slightly, and you see the left-hand plane continuing to drop. Obviously, I already talked about that. Significant expiry. So these are in the money calls. These drop a little bit and then drop below 0. So again, that's a little bit weaker state. But again, this could change heading into the end of the week and then into next Monday. But then you see the right-hand plane actually in a positive slope. So that's indicating out of the money call speculation. This could just be an opportunistic expiration on Friday of those in the money calls below us and then out of the money put speculation. Or this could just ramp back up to the upside. So we'll continue to watch this. Just a slight drop in the overall delta balance, so nothing really to worry about, not indicating we're going to have a significant pullback. But again, just some weakness possibly heading into next Monday to be aware of. Everything else looks good on the delta balance. So SPXP net stack command, again, we're in the money calls above and below spot price on the net delta line. You want to look at this right-hand plane strike at 70.10 and the integral there. So that's going to be important to get above. Again, I talked about 7,000 and then 70.25. And then any pullback, we'd be looking for 69.80 to be supportive there in the money calls. If we get below 69.39, then again, you see these in the money calls transition out of the money puts. That would be weak. And then here, again, if we drop below 69.66, those out of the money calls become in the money puts. Again, that would overall be a headwind and slightly weaker that we watch. Charm, discuss this, 70.70 to the upside. Again, those out of the money calls, if we're below that level, will continue to be a headwind. Obviously, a significant strike above where we're at now. And the out of the money puts will be supportive to the downside at 69.50. There's Gamma, high sensitivity. And then Vanna, we're almost 2-1 with the opportunity for a Vanna tailwind or a Vanna rally if we see volatility drop, as well as out of the money calls go in. You see the left-hand plane integral is 3.3, right-hand plane integral 6.3. So again, any drop in volatility, out of the money call speculation intraday will have that Vanna tailwind to continue to drive us to the upside. All right, let's look at the SPX P0 DTE, call dominated above and below spot price. Drunken sailor range for today, 69.50 up towards 7,000. Pre-market, we were testing that 7,000 level. If we get above 7,000, we'll be looking for 70.10 and then 70.25, 70.30 to the upside. Sorry about that. And over here, you see that charm headwind we just discussed at 7,000. It drops a little bit, so we'd have an opportunity to push really quickly towards 70.10. And then you see that charm headwind come back in there. Again, we can overcome this charm headwind with Vanna as well as out of the money call speculation. So again, this is just indicating that this, if we continue to the upside with not a significant drop in volatility or significant out of the money calls come in, it's going to be hard to push to the upside. But if we do see that drop in volatility, out of the money calls come in, the call versus put speculation intraday that we discuss, and both those slopes are to the upside, we definitely could overcome this and drive to the upside. We have significant out of the money calls above us that can capture those deltas pretty rapidly if we move into those overall strikes. And into the downside, you see transition, very, very important to stay above 69.50, 69.40. Again, we would indicate most likely look at that as a stabilizing area within the overall structure, and then be an opportunity to go long most likely, unless we see the MTM fall apart as well as the sentiment structure have a rapid shift or change. So thanks everybody again for joining us. This is presented by GamEdge.us. Come and join our newsletter on the weekend, Beyond the Bell. You'll be delivered this to your inbox. And then our free courses, GamEdge Fast Pass, our flagship options course. It's all free. It goes over our tools and our methodology and how we navigate the SPX option structure. And click on the pricing tab. Come join us in our Discord, 14-day free trial, all the tools turned on. We have a significant trading community, traders of all levels that would be happy to help you get up to speed, including our GE team that is in the Discord live trading. So let's go over some individual tickers now. If anybody wants to check those out, post those in the overall chat, and we'll check those out. So let's look at the upper quartile and GLD. I know we're in SLV. I know we're seeing a significant bounce pre-market in GLD and SLV. Looking at the overall structure, really the past few days on that pullback to GLD and SLV, we'll talk about this. I'm not saying that hindsight is how we need to look at these overall charts, but the structure, the option structure was continuing to be supportive on GLD and SLV. SLV, the 70 strike was very supportive on any pullback, and that's happened chances right where we bounced on SLV. So GLD still looks good, call dominated, above and below spot price. To the upside, 460. Yeah, we'll look at hood or INTC. I'm in INTC and it's looking great actually. And I talked about that last week on our wheel strategy. So anyway, GLD looking good, 460 to the upside. PGEX, we are transition here. So that's a little bit weaker being below transition, but you see all of this significant in the money calls below us that are supportive. So any pullback on GLD, unless the structure changes, will continue to be supportive. So really no change there. The fourth, you see 450. So this is flipped, obviously, so we can't provide a transition area. So 450 is PGEX, excuse me. So we're slightly above that at the moment. And you see index overhead at 455. Next expiry into Friday, you actually see the structure advance 459, 460. So again, there and up towards 470. And then as we get into Monday, the structure is 450 and 455. So we're just flipping back and forth. So individual expiries, you can't really tell much, but when you click on the quartile, understanding where the largest OI is, structure still looks good. Obviously, we'd like to see the spot price above index, and you'd like to see the structure continue to advance, but supportive on any pullbacks on GLD. So hopefully that helps on that. Now, SLV, 80 has been that cap that I was looking at on the bounce. Actually, the structure's moved up to 88. Let me look at the quartile. Structure's at 80. Again, look at that 70 level. Just massive in the money calls below us for this total OI of 75%. So it was just logical that that's probably where we're going to see a bounce. And we came almost right down to the penny, held 2 days in a row. And now we're seeing a significant move back to the upside. So a lot of fear and emotion was coming into SLV when we hit 100. We had that just massive pullback. Again, I don't know the backstory on SLV. I mean, there's a lot of speculation of what happened. I mean, but the fact of the matter is, I'm not looking at this as hindsight, but a lot of people are short-term traders, right? And I know there was some macro things that were probably involved in this also, so I'm not even going to go into that. But fear and greed in the overall market is what drives spot price. And we can look at that via the option structure, right? Option structure still stayed very supportive on SLV on the pullback, even though we were having these massive moves, just significant volume sell off. And you and I both know, everybody on here, probably what happens. People open their brokerage account. They bought SLV at 90, expecting it to go to 150. It was dropping to 80. They're underwater and they just throw in the towel, right? It's just emotion instead of sitting back, taking a little bit glance, taking in the data and saying, okay, the structure's still supportive. I may take a little heat. What can I do to offset some of my losses here? And then let's figure out, how we need to navigate this. And also, as we talk about the option structure, spot price is not going to go where the options are not at, right? And the options were very supportive into the 70 level. You see, they're actually supported into 65 and even into 60. Now, that's way below where the peak at 100 was. So it would be difficult to stomach that hold from 100 all the way down to 70. But there was a significant amount of supportive type action. We're call dominated still on the structure, even though SLV was selling off. So where do we go from here? Getting above 80 is going to be extremely important. I expect some stalling into 80. If we get above 80 and we start seeing these in the money puts overhead start throwing in the towel or getting a little bit of fear, and then we start seeing out of the money calls come in, these would start changing to out of the money speculation to the upside, 85, 90, 95. Then we definitely could drive to the upside. You see this million up here, net delta at 95. These are out of the money calls still, right? And we can look through this and see when the expiry is. But I mean, there's speculators still in this structure, and there's a couple other things we could look at there. So anyway, let's move on to INTC. Oh, we looked at, okay, so so INTC call dominated. Everything looks good here. To the upside, 50 is that area where I'd anticipate some stalling. Actually, I think we're above 50 right now, but this was completely supportive on a pullback. I talked about that. I got assigned in the wheel strategy. I was not watching when EPS was. I got assigned at 47. It dropped all the way down to 42, but look where we bounced at right here. We bounced right here at 40 and then ran to the upside, and now we're back at 50. So if you're assigned at 47, I just continue to sell calls, and I most likely will get those called away this week and be in very good shape. So, all right, so that's INTCs. And I talked about that last week. I said, INTC still look good. I would be looking to buy the dip on INTC, and that was not financial advice. But all right, hood, put dominated, above and below spot price, supportive on a pullback, but significant overhead puts, upside price appreciation is going to be difficult. 93 is where I look for some overall stalling, and we're right at transition area there. So now, Mosey, I don't like to look at the leveraged ETFs. We can look at them. I'd rather look at QQQ and use that as a proxy. TQQ, call dominated, 60 to the upside. And you can use this. I'm not saying you can't use our web app, but I'd rather look at QQQ and trade TQs off the Qs. Okay, does that make any sense? Again, that's TQQ. You can look at this 55.50 to the upside, so everything looks good there. And then QQQ, let's look at that. Actually, QQQ is on our PTrans to PGX user, absolutely. And so Qs are put dominated, but significant speculation to the upside, I believe most likely so negative on the NegEx. Interesting that we're put dominated though. So I would assume it's the puts to the downside. They're actually pulling us down. But to the upside, look at the speculation. Looks good. We're above transition. So just because we're put dominated doesn't mean we can't move up in spot price. Let me make that perfectly clear. This is just telling us what the structure looks like, but you have to take this into context. Where's the speculation at? Where are the puts at? Where's the largest strikes at that are the puts? And those are under us, right? And this is these are out of the money puts. So people were speculating significantly to the downside, but this also could be hedging. Okay, this could be hedging to the downside with a different instrument to another portfolio, because we've seen this, that SPY and Qs can be used by institutions as hedging instruments. And we'll see those have a completely different overall structure than SPX. SPX will be extremely call dominated, as well as SPY or IWM, and Qs could be put dominated. And this could also just be hedging that is occurring within the overall portfolio. So let's make sure we understand that. But back to Qs, or above transition. Speculation to the upsides, PGAC 640. So this has the opportunity to move to the upside. And you don't see that charm really come in at 640. So take that, not financial advice. I'd like to see in the money calls below us, though, a little bit more supportive. Obviously, these are out of the money puts. So, and that is not necessarily bearish. That can just be an overall, as I said, speculation or hedging. But I'd like to see some in the money calls below us start to build into and fill in. That would give us an overall supportive type action on the move to the downside. And again, you would like to see this call dominated because that's more favorable environment with the overall structure, price dampening, within the structure and supportive on any pullbacks. So hopefully that helps. Okay, good. All right. Thanks everybody for joining us. Again, like and subscribe on X and YouTube. You'll be notified when we go live and we post any content. We appreciate you for joining us. And as always, manage risks today. And looks like we're going to open up. So 7,000 is going to be that key level to get over. Pull back to transition 75. I'd be watching that. And within the drunken sailor range, it could be choppy, even a pullback down towards 69.50. So, all right. Thanks, everybody. Have a great day. We'll see you later.